evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for a pretty wild Monday, and this is the 3rd of October, 2022, 5:15 p.m. Before I get too far, for those of you that are on my mailing list, that means you're either a subscriber to my research, you've been a subscriber, you've gotten something from us via our emails. You were sent an invite for a live webinar that is this Thursday at 12:30 p.m. The rest of you, if you don't go to our website and do things, well, you have to wait until I put it up here eventually and tell you how to get to it. But check your spam, check your emails. This is the second one. I sent one yesterday. I sent another one today to you. The webinar fills fast. Last week, 2 weeks ago, I think it was actually 2.5 weeks ago that we did the other one, we had nearly no seats left in it. So we're going to fill up. It's only 20 minutes long. It starts promptly at 12:30 p.m. Central Time. It ends at 12:50 p.m. It is not recorded to post on a website. I take all your questions, and how you do it is you sign up for the webinar. When you get the receipt with your user ID and password from us, it comes right back to you instantly. In it, there's a section that just says to write Ira, just click here, just click it. It opens up, gives you the questionnaire right there. Tell me what markets you want me to cover. It gives me the opportunity to create the charts so that we really keep this thing moving. And that's what it's all about. Movement, answering questions, teaching. 20 minutes flies. Again, Thursday, 12:30 p.m. You better take a look. All right. So last week, we heard the OPEC meeting coming. They were setting up a meeting in Vienna, which they hadn't done in 2 years. And then over the weekend, lots of now talk that as the big mouth ministers let their words out, that's what I like to call them. They do this all intentionally, by the way. I don't know if you know, OPEC doesn't have a formal announcement. They just let everybody walk out and talk. It's the craziest thing. They're talking 1 million barrel cut. Now, who's going to do that? Who's going to do that part? Remember, we have a lot of countries in OPEC that aren't even meeting their quotas, so how are we going to cut back? That's the first thing. Russia certainly wants to see this happen because it'll prop up the price of oil and help them with their war effort. And OPEC Plus has the problem, do they want to be viewed as helping Russia with their war effort by the Western world? It's tricky, and they've got to figure out what to do. I, at first, 10 days ago when I heard this was coming, not for these type of numbers, figured, they'll go to 200,000-300,000 barrels a day to gradually put the support in the market. Well, they're really unhappy. We knew that from the last OPEC meeting because they said that the market was schizophrenic, if you'll remember that. Just go back 30 days ago, you will see what I'm saying. It was all over the press. Well, now they want to do something about our schizophrenia and the market's dysfunctional way of treating their oil prices. So it's called, they'll manipulate it. They'll take supply off the market, and they're going to do it. Now the question is 500,000 barrels, 1 million. I don't know what they're going to do, but the market's starting to price it all in. You're already up here near $90 in the December Brent and November crude, no longer in the mid-70s. You're back to $83. When you look at the stock market, a weekly area chart of closes, you're getting another bounce from a new low area. It's a surprise. A week ago Saturday, I forgot, did I not put out a stock index report that stayed until this past Thursday, calling for a bounce right here off the Bollinger Bands? We got what I'm asking for. Do I think it's a market turn and this is the bottom of the market? I don't, but that's all I'm going to tell you. If you saw the report, you know what I said. I'll live with it, and I'll live with what it's doing right now. So we have a market that's got a higher high, lower low. There is no swing line pattern there. If we can get a good rally, possibly, 38.17 is a target the market can get to, possibly. It could be a combination over a few days of the 18-day average falling, prices coming up if it can continue the rally. Why did it rally today? In part because traders are desperate, looking for the first signs that the Fed doesn't have to go over and over 75, 50-point hikes. They're looking for a sign that the economy weakens, and the ISM manufacturing data came out very weak today. And that was the sign they want to see. They want to see that the economic data reports come out. Now, there's two big reports this week, jobs reports. So we get the JOLTS, which is the amount of ads running for people in theory that are looking for jobs, and you look at the ratios. Then the second big number is the jobs data, and that's on Friday. And we'll be looking to see how many jobs were added. The whisper number is right now 250,000 jobs, which is down from where it had been, but they want to see it shrink even more. Of course, you always get your unemployment claims, and everybody's watching those to see if they continue on. So this is your jobs data week. I'm laughing when people are saying today, well, first sign inflation is cracking, because the ISM manufacturing data is down doesn't mean inflation is cracking. It's a slowing economy, but have they lowered prices? That's what I'll be looking for. That's what breaks inflation. You can produce less, but if it's all at the same price, have you taken inflation down? Not really. So as I look at the market, okay, ready for a potential bounce, and you're losing the embedded reading. Now, let's look at this and just get a feel for it. When we come back, let's go to Friday. You didn't lose the reading there. Today you didn't lose it. You're losing it right now as we're talking. Will it stay lost? I don't know. You don't want to get what's called stochasticitis, which means you're watching this and, I'm getting bullish because it's going to the 18-day average. It's got to settle with it lost. Do we understand that? Over 21. It didn't do it. So first sign that it's going to. What happened in the NASDAQ? Did it lose its embedded reading? So here we are in the close. Nope. Don't get stochasticitis. I'm wanting a rally. You know that. That's what I put in my report and everything because I have a game plan for it. You're losing it right now. I'd like it to be lost. I'd like to see the market rally back to the 18-day average. We'll see what goes on. But this is going to be a hard week because of all those jobs numbers. Just please remember that. Then we get to the micro mini. So did it lose its embedded reading? Okay. Nope. Didn't do it. That leaves one market left. And I wonder what that one is. All right. So this one is the Russell that everybody seems to love. Okay. All I keep hearing is that in a recessionary environment, you want to own the small caps. So this should be the strongest of the indices. And the first one, if we're going to get further coming out of this break now, that rallies. So we come in and let's go to the close of business today. I'll be a son of a gun. You got a reading of 21.19 the first time. You were fully embedded last Friday. All this was there. You lost it. So on the close today, the way I teach the slow stochastics, if you haven't taken my enhanced Bollinger Band course, go on our website at iraepstein.com. Under the word education, it's there. Take the darn course. This is a sign right now that in theory, this market could make its run to the 18-day average of closes. And yes, this is the one I don't want to be short. End of discussion. And by the way, if you're one of my subscribers in the morning, are we all smiles today? What did you do? Good day. Okay, in the VIX cash, as the market is now overbought, setting back. If it breaks from here, remember how many days it had over the upper Bollinger Band, you rarely get beyond 5. And each day you count as one day over. If you settle over it, it takes the percentages away. Often when it breaks down, it can get back to the 18-day average to regroup. Maybe that's where the market's going. It's in an uptrend, correcting an overbought condition. And if you take out 29.39, the odds strongly favor wherever that 18-day average is, the market will go back there. In the bond market, you lost the embedded reading where? My friends, it was all the way back over here. I just want to show this one. And what did I teach you? And one of the things that I teach in the course, and the neat thing that I developed when I was putting this together and discovering this myself years ago, was you often, not always, you often get time. So this was a time right here with this settlement at 22.90, the first time it told you not to be short. And over time, unless you take this low out again first, Price and the 18-day average should make a run at each other. You tell me what's going on. What did you do here? You lost the reading right up to the 18-day average. You stopped cold. What did you do here in the dollar? You lost the embedded reading. You're trying to break down to the 18-day average of closes. The euro never did embed. It just got oversold. This is a bear market rally, in my opinion. This is not good news. This is the market recovering. The British pound recovered today too. And the pound recovered because, I don't know if you watch the Conservative Party, you know, this is all televised, you can watch it. And you were watching Ms. Truss and her exchequer try to figure out how to backtrack because their own party is ready to throw them out. They had to backtrack on the high tax rate, breaking it for the wealthiest in the UK. That's out the window. They're going to give tax breaks to other classes. They're still going to pay the energy bills and so on. But I haven't heard how it's being paid for. Even all this. Now remember, how are they going to pay for all this? That's what we have to find out. And they haven't offered that yet. So there's plenty of fighting going on. And I call this a relief rally. This is nowhere near out of the woods. If you think that's the case, I think you're making a serious mistake in it. Bitcoin is sort of stuck sideways at the 18-day average. The trend is down unless you get back over 20,190. The support on breaks is 17,904. And if you can clear that 20,190, you open up the door for a potential test of the upper band. But right now, the bears are still in control of the market. When you look at Brent versus WTI, well, it's come in from the $7 level to $6.23, but you've turned bullish now, which makes sense because you're hearing that the big producers, the guys with whatever spare capacity is out there to produce, are turning the spigot off, all right? America doesn't have spare capacity. They have the only spare capacity. It's in about 3 countries, and that's it. And now the market is saying, okay, I've got support at 88, 82. We have a failure on this if you get under 84.99. And if the market can lift, the resistance is between 93.15 to the upper band of 94.50. In the WTI, it's the same. If you can lift, you got the mixture of resistance, 89.49 to 50, the 200-day average in the upper band. You should not get back under the 80.14 level. You're not overbought, still looking okay. It's a lot of risk. I mean, buying at 83 and risking to 80 is $3. That's an awful lot in these energies. Rebob gas, I feel vindicated. I stuck my neck out and I kept saying, I think the market is bottoming at that band. I've said it to my subscribers left and right. And I said, even in heating oil, I said, you don't want to press the short side. The market that surprised me was the nat gas in falling as much as it is back to the 200-day average. And it's simply because what's going on in Europe is at very high prices, Europe has reached out and gotten plenty of supply that it needs to get well into the winter months. They know what Russia's doing. They know Russia's going to cut anything that's dribbling in. That's what they've been doing. And why would they think it's going to change? Italy saw its gas cut over some technicality in Australia from Gazprom over the weekend, all right? You know, but they're only getting 10% of their natural gas. They used to get 40% from Russia. So the world's finding other sources. As usual, the U.S. is doing its best to get the gas there, and that is the good news. And we'll have long-term clients because as these gas commitments run out, then you start chopping price and we'll have new commitments. But right now, it's beautiful in America. We're not freezing anywhere. There's no snow on the ground, so you're probably getting builds. And you don't have that Texas facility shipping out another 16% of the gas that could be shipped out. That's still in America here. So you put it all together, you get your game plans, and you handle them accordingly. But that's what I come in with. In the mornings, what I try to do with you is at 5:30 in the morning, typically, I'm recording. I get up 3:34 in the morning. I've read. By the time I'm starting to record, I've already written a newsletter for the morning, believe it or not, had my coffee. I'm ready to go. And I start telling you number one, what's going on around the world impacting the markets. Number two, let's get to trade setups. I do that, by the way, on the weekends on every Saturday or sometimes Fridays even. I'll give you especially wintertime. Summertime, I stretch it maybe to Sunday every now and then. But in the wintertime, hey, this is what I'm doing. And we give you the weekly charts. Now, you're going to get specific buy here, sell there, do this, do that. Here's your stop, get out at the market. Here's my rationale on it, right in front of the charts, explaining the logic of it. I'm not managing anyone's money. I want to make that clear. It's just me. All right? I don't have any clients I'm managing money for, so I don't have to answer to anybody. This is what I see in the market. And I want to be the guy that in the morning you say, wonder what Ira's thinking of the market. So I price this cheap. I always look at the price of when I go to a Starbucks and I buy a coffee, and to me that's a treat. I mean, I hate spending, by the time I'm through with my tip, $6 for a coffee. So I price this to the area where you're going to spend less with me than you would on 2 coffees at a Starbucks typically to get 24 videos. Each video about 18 minutes long. 4 weekend videos of just talking the long-term charts, and the 20 videos sitting there with the daily, and I do mix the weekly in. What do you have to lose? 2 cups of Starbucks? Get serious. So if you're serious about it, go to our website, under market research. Give yourself a chance. I think you'll find it interesting. If you want to learn about Bollinger Bands, well, when you're on the website under education, it's all there. And remember, we are having that live webinar. It's coming to you this Thursday at 12:30 p.m. I'll get invites put up here for the rest of you. I want my subscribers and the people on the website to get their chance. They're the loyal ones at this point. You take care. Talk to you later.